CNBC. Tonight, it's never politics as usual on Equal Time with Mary Madeline and exciting guests.
Welcome back, everybody. Time for Tech Talk. Joining me now is a man who says that the party for December copper futures is coming to an end, and why that is good news for the bond market. My guest is Alex Saitta. He is the Chief Technical Analyst for Salomon Brothers. Alex, good to see you.
Nice to be here.
Just when copper traders were getting excited, you're about to rain on their party, I guess.
Yeah, exactly. I think the one-year uptrend is weakening and it's about to reverse. Now let's just go to this diagram here, and first we'll learn something.
Right.
On the bottom axis is time, on the left and right axis is price. Market A's price rises at a faster and faster rate, so this type of uptrend is getting stronger. Market B's price rises at a slower and slower rate, so this type of uptrend is getting weaker. And Market C's price rises at a constant rate, so this uptrend is not getting stronger or getting weaker. I know it's simple, but I lose sight of it all the time. Now let's go to the second chart, which is a 6-month copper chart. And drawing a line through the center of the price action here, we can see that the market is going up at a slower and slower rate, and this uptrend is weakening. So whatever fundamental force has been pushing copper prices higher, that force is beginning to weaken. So what I'd look to do is sell copper on a break of support, anticipating that this uptrend is about to end and trade lower.
All right. Now, at what level would you be doing that? Am I kind of misreading here, around 125 or one?
Well, actually, we're trading around 116.
Okay.
Support is at 114.80, which was Tuesday's high. So I'd look to sell the market on a break of that support level.
So you do not think it would get up to the 125 level?
No.
You don't.
I think it's going to roll over from here.
Okay.
My downside target is 106.10 minimum, which is the August 5th low. And it could go as low as 100.
All right, now that's potentially very good news for those who trade Uncle Sam stuff. We'll get to that in a second. Right.
Okay, let's go to the third chart. And if you trade bonds, what's happening in copper is very, very important.
Wow.
Now this chart goes back about 2 years, and it has copper prices on the top and has bond rates on the bottom. You can see the relationship's great. When copper goes down, bond rates go down, and when copper goes up, bond rates go up. Given that the copper uptrend is weakening and it's about to reverse, this is signaling that this uptrend in bond rates is about to reverse as well.
Now, typically for a lot of our investors, metals, anything of this sort, when they look inflationary, that's worrisome to the bond market, hence the correlation, which I didn't know was that right on the money. But this is coming at a time, as you know, Al, when a lot of people are expecting the Fed to tighten. This would seem to indicate that regardless of whatever the Fed does, if copper does sort of break some of these levels, the bond market could look a lot better.
Yeah, exactly. Well, I think it's a little bit early to say that rates have peaked. Given rates have been going up for about a year, they're not going to turn around in a few days or even a couple weeks. It's going to take some time. We've reached a high of, let's say, 805 this morning. We could go back to maybe 810 or 815. But given what I'm seeing in copper and what I'm seeing in some other commodity markets, I think the bond market's going to be a good buy around 810 or 815, so I'd look to buy them there.
Are you seeing a pronounced, and again, this is not fair to do on a technical perspective, but are you seeing then inability for copper then to hold these present levels much longer?
Yeah, exactly. About 3 weeks ago, copper fell 7% off its high, and I think this rally we saw, although it went to a new high yesterday marginally, I wasn't too impressed with it. I think copper's going to break lower. That's going to be positive for bonds looking at that relationship.
I know a friend of mine who sort of correlates copper with how the big three auto stocks fare as well, and argues, I guess, as he does for home builders and the like, that as that begins to dissipate demand for those representative issues.
Exactly. Copper and bond rates are tied to the economy, so when economic activity begins to slow, it's signaled in the copper market, bond rates usually start to come down.
So beyond just what you're telling us here about bond rates, this is telegraphing a slowdown in the economy.
I guess so, yeah.
Okay.
That's out of my
I'm going to put words in your
Okay.
mouth there. Alexander, thank you very much. We appreciate it.
Okay.
Our guest has been Alexander Saitta, the Chief Technical Analyst over at Salomon Brothers. Or we're going to go back to Bill Griffith and look at today.